Yeah, what's good, everybody? Just testing out some logistics, making sure it's all working. Yeah, what's good, everybody? Just testing out some logistics, making sure it's all working. All right, I think we got it up. Yeah, audio's good. How's the audio sounding? Nice. Okay. Yeah, what's good, Manny? How's it going? Whoa. Nice. Yeah, what's good, everybody? All right. The audio delay is or the video delay is really long, so um, yeah, I asked that question like almost a minute ago, but all right, let's get this started. So let me open it up. Okay, so as we all know, the markets are in a really critical area right now. So I think this is something we could just simply call the danger zone. And if you're in that Discord, you know that we've been looking for this range since we were down here. And so that's where we were testing yesterday, right? It's barely delayed. Okay. Yeah, I guess it's just on my side then. Okay, so yeah, we had a pretty clear rejection, which is really normal considering we moved up 16% into this resistance with not really any buildup. So it's incredibly normal to see that rejection on your first attempt. And yeah, so I think what we need to be watching for today is a few things. So if we're looking at Tesla, this is something I saw this morning. So if you're in there, you know I'm really looking for some upside to over 300, fill these imbalances. But if you look at the shorter term, I believe on the 4 hour, let me find it. 1 hour. Okay, so the 1 hour. So we have some imbalances below, which could be a potential issue. And I think the big one we need to be watching watching right now is this one right here. So we are definitely respecting this. I'm not sure what this is. Okay, yeah, I see. This is just a really big volume node. So yeah, it's very normal to see some this is actually where most of the volume is traded, like at I guess like in forever. I'm not really sure how you want to say it, but yeah, right here. So it's really normal to see some fluctuation around this price at 250, and if you like watching order flow and stuff, you'll see that there's a lot of strikes sitting at 250. So 250 is a massive area. I guess 250 to 260. So if we can start pushing above this, I mean, you don't really have any supply above. So taking into account this entire range, but if you're just looking at this entire range as a whole, there really isn't much supply above us. So it would just be a matter of having enough momentum to push through, I would say, this range. So 280, 284. There's no resistance until my target, which is at 340, 350. So it's very plausible to see Tesla move up to my target, which is sitting at 340, 350. So I'm still looking for that. Nothing has invalidated that. Uh, yeah, I mean, you have, I don't think I've ever seen this before, a descending expanding wedge inside of a descending expanding wedge. And this is the most bullish pattern that exists out there. So, yeah, take that how you want to, but this is one of the most bullish setups I think I have actually ever seen. So, and the other thing about descending expanding wedges is that you can't really invalidate these. So these exist until it plays out, um, and that's why I'm such a big fan of them. So like you just can't invalidate this pattern unless you, well, the only way you invalidate it is by breaking through this bottom trend line, which like I don't think that's possible. Um, at the rate that you would have to fall at to break this bottom trend line is, I mean, you're looking at going to like $10 or something. So that just doesn't work like that. You'd have to break this trend line and then break this. Like that's just not how it works. And then even after that, you would still have to retrace this. It doesn't work like that. So Tesla, I'm still really bullish on, and I don't think there's anything that would make me not bullish on it unless we break this level. But even then, you would still probably see something like a turn up. So at some point, Tesla needs to get back to 320, and that main, not, I think my main target would be considered 320, and the big one that I would really like to see is the 340s. And then I would probably just hold some runners, maybe move up to 401. So I'm telling you, there is a lot of potential upside on Tesla. It's just a question of if it can pull it off. Well, when it will pull it off. So, um, yeah. And if we're looking at the market as a whole, um, today I think what you want to be looking for is a few things. So one of the key things is going to be that we don't sell off very hard today, and I think that goes without saying. But um, this does not look very bearish to me. This just looks more like 2 steps up, 1 step back. Um, you have this downward consolidation, so almost like a channel, you could say. We're gonna go in a little more. Um, yes, probably something like this. So, this is a channel, a bull flag. So it's looking bullish unless we break this, and that's what I meant by not having a big like strong flush. If we continue holding this, we should see something where you're consolidating downwards in this channel, then you break to the upside. And if you break this high, I mean, you have to fill this fair value gap at 19,700. And then if you do that, you're going to be testing these trendline resistances. So, yeah, today is actually a relatively important day, because this is what would probably today would be the day to confirm continued upside. So again, descending expanding wedge, you get your breakout, and that takes you up to, you got these targets right here. You have a liquidity sweep right above this high. You have some fair value gaps in here, I think. Yeah, a small one right here, small one right here. So there's a lot of incentive to get above 21,500. So that's what I would be looking for, in my most preferred scenarios. So, yeah, what stocks do you guys want me to look at? I think today's going to be more of a just kind of like live technical analysis. So, yeah, just start dropping stocks, and I can like take a look at them, and give me like the time frames you want me to look at them. So, if you're day trading it, or if you're trying to swing trade it. So, yeah, just drop their stocks in there. And I think one thing I really want to explain is how we saw this gamma squeeze coming. And if you go into my last uh, live stream, let me clear this chart up a little bit. AMD. Yeah, I know. I've really been waiting for this thing to get to the 70s, and we finally did that. So, yeah, this AMD was really a pain. I mean, I just was never able to enter this full position because I didn't like how I want you don't. This is something you do not want to see, where you don't hit this bottom trend line. You were just drifting, like what felt like months. March. I don't know. It felt a lot longer than 1 month. I think I had my first entry right here. It was really small, and then I built up more of my position right here. After we filled this daily fair value gap, and then we finally got that drop, and we didn't even get to where I wanted to go. So I'm not really sure how to interpret this. 4-hour MACD, you want to see this cross, but there's no divergences. I don't know. AMD is an interesting one. I would feel a lot more comfortable if it got to the low 70s and tested this region, because that would give us a trend line touch. That would also give us a test of this. Well, I guess you have this whole range, so it's hard to say. I think we need a couple more days for AMD to see what it's really trying to do here. The long-term setup, I mean, you're still looking at 140 to 130, and then above that 160 to 153, and then you're looking at 178 to 173. So there is a lot of upside on AMD. It didn't quite get to where I wanted it to go to. So I'm not sure how I feel about that. And you were saying the 1 hour. I don't know. It's a little hard to say here. I think this is something you'd want to be paying attention to the next few days. I think that'll give you a more clear picture. Right now, it's in the middle of nothing. So preferably we see this at some point, but that would mean the markets would have to move lower likely. So I'm not sure. I think this is something you need to wait a few more days for to get a better picture. PayPal. Wow. Ouch. Liquidity sweep. That's the first thing that comes. The first thing that I see here. So if you're in the Discord, you'll remember back here in December. I was looking for 72. This box right here, which was a gap and a fair value gap on, I think on the daily. Maybe the 4 hour. Maybe weekly. Well, it was a target on one of these time frames. You had a weekly fair value gap, which I think I actually missed, but it was definitely coming back to the 70s, and then that didn't hold, so that was your sign it was probably gonna go lower. So here's a little trick, I guess. What was a good example? There's not really a good example on PayPal, but I guess this could work. So you really want to see if you're looking for like this to hold, you want to see it bounce off the bottom. So like this is bouncing off the top. You would have wanted to see this happen right here. And instead we dipped below, we closed below it, went below it, tested it as resistance, and that was your sign that it's probably going to get annihilated. But on the flip side, when you're seeing something like this, it's pretty indicative that it's going to hold resistance or support if it's the other way around. So this is where those closes of a candle really matter, and they matter even more when you get onto the higher time frames. So PayPal, I almost just want to say it's bullish because of this liquidity sweep we just got, but it's probably going to take some time to shift because the momentum to the downside is still really strong. Let's see what the daily looks like. Okay, you have a bullish divergence. That's a good sign. You have a descending resistance, which it's been trying to break. So if PayPal can hold like this area right here, let's zoom in a little bit. We're gonna use the volume profile for this. See where the volume is being traded at. Yeah, so right here. If it can hold this range, you'd probably be looking at a breakout here. You got a gap right here, so you may be looking at 68, and then the big area is gonna be 70 to 76. This is gonna be what's called an inverse fair value gap, and in order to get to the upside, you're gonna have to break through this. So there's a lot of stuff that needs to happen correctly for PayPal to be able to, I guess, thrive and survive, whatever you want to call it. So yeah, look for a test of this region. I think it's pretty likely to test this area. Yeah, and then another big area to watch on the shorter time frames is going to be 62 to 6150-ish. So yeah, PayPal is something to just watch right here. Anubis? I feel like I've heard of this one. Nebius. Alright, let's see. Okay, I've done some charting on it before. This must have been a while ago. I don't remember charting on this, but I definitely would have been bearish when I was charting this. So this pattern that I'm looking at, this is a really good example actually. So a descending expanding wedge is to the downside. This is an ascending expanding wedge to the upside. And this is one of the most bearish patterns out there because, like I said, you can't really invalidate this unless you just skyrocket. And when this happens, mean reversion comes into the question. So you're probably going to come back and test it to test like the median of this kind of move up. And like these just rarely fail. I just do not remember the last time I saw an expanding wedge fail because you have this pattern where the ranges are getting wider and wider and it needs more momentum to touch that side of the channel, whichever side is, I guess, more steep. So like if we were to come back down to this trend line, like look at how strong of a move we would have to make. We would have to move all the way down to, you're probably looking at, well, you're definitely looking under 6,500 for sure. But I think I would be looking at 16,000 to 15,000. I'm getting a little sidetracked here, but yeah. But what I'm trying to say is it takes an extraordinary amount of momentum to invalidate these, and that just does not happen. Very rarely. So this on the higher time frames, I don't know, maybe you could get some kind of move back up into here. Let's take a look at the volume profile. So I think we're going to have to look at the volume in two different areas. Yeah, so just to return to the mean reversion, you're looking at 32. So if you can get to 32, I would see how that looks. You'd be sweeping a lot of liquidity right here. A lot of liquidity to sweep at like 29 to 30-ish, 31. So 32 is a pretty good area to be looking at. Yeah. It looks like it's holding up. It actually looks pretty decent. So you have the MACD trying to curl up. Let's see what it looks like on the 4 hour. Bullish divergence. I think you could be looking at 32. 32 is a level I'd be looking for. So to the downside, I mean, it filled the downside targets too. So honestly, it looks pretty decent to me. This one filled too. I don't really have any downside targets. So I think I want to say I would be looking for 32. If you look at Fibonacci ratio, 3450, pretty close. So this is your area to watch for Nebius. 40 to 30. I think we'll get back up there. Visco. 18 is IPO. For Nebius, IPO. Huh, okay. I mean, it looks like it opened at whatever this is, 40. 18. Alright, we're gonna look at Visco. I know they had a stock. I don't know, this doesn't look very healthy to me. Maybe you could get some sort of mean reversion. If it can hold these lows. I would only look to go long on this if it can break above 22, I think. Because other than that, you're looking at new all-time lows. I don't know. This is a pretty dangerous one. I would keep a stop loss below 1370. Let's just take a quick look at their financials. I'm willing to bet they're not fantastic, but alright, they're not like abysmal, but it's nothing special. Operating income, it's profitable. I don't know, there's not really anything special to say about this. I think if anything, you would be looking for mean reversion of this entire range here, which again, the 30s, 33 to 31, what is this? 3270 to 3070. So if you break above 2260, I think you're looking at 32, or you can see 32. First target would be 26. And to the downside, this thing could bleed pretty hard. So I'd be careful with this one. Just make sure you have some stop losses. Yeah, that's what I gotta say about that one. Celsius. Interesting. Okay, I've been watching this trend line for a while actually. I unfortunately missed it when we got down here, but very interesting. Let's see what the daily looks like. Wow. Yeah, that was quite a run we had. I remember this one. I almost started investing. I was gonna put in 5,000 at like the 20s back in 2021. Sometime, or maybe it was 16. It was either here or here. And then it just never stopped. So this one has always been one that hurt to look at. But this drop blew me away. This was like 80, yeah, almost 80%. So this is what happens with these parabolic runs. I mean, this is like your textbook. You get your 5 waves up, and then you just die. Usually it holds like this region right here, somewhere around here, but because that would have been around the 50% retrace. So again, mean reversion. Yeah, like I was saying, around here. So I mean, if this thing can hold up, GameStop, alright, I'll do some GameStop analysis. So let me finish this up. So what was I saying? And again, ascending, expanding wedge. It takes extraordinary momentum to get to the upper bound of this channel, whichever side is steeper. So usually when this happens, you see an enormous reversal. Because again, mean reversion, it's simple statistics. You have to return to the mean reversion. That's just how it works. So where do you start drawing your trend lines? So this is just like I'm just gonna give some like the basic technical analysis layout here. So what you're really looking for is the most amount of touch points. So to keep it simple, you want whatever can give you the most information, right? So this looks pretty decent just from a glance. So actually no, never mind. Maybe from here. So this right here, I'm looking for something where there's more than 2 touch points. More than 2 touch points will give you something to work with. And this isn't the greatest example because normally this pattern actually breaks down, and it didn't. But this is something I would have had on my chart back here, and I would have been looking for a breakdown, but obviously that didn't happen. So let me use a different example. Here's a good one. Actually, no, we're gonna zoom out to the 4 hour. Yeah, so you're gonna look for an extreme high or an extreme low. So in this case, the extreme high, you're gonna look for the most amount of touch points. So that's gonna be, I would say, right here. And then another thing you can do with channels is to make sure they're parallel. I mean, it doesn't really work in this one, but a lot of the times, if you take this line here, after connecting it with the highs, it usually lines up with the lows. So yeah, this is a channel right here, and I'm just drawing it differently so that I can see interaction with more touch points. And then you take your extreme low here, and yeah, so this was a wedge here. It didn't have any divergences, but this was a very strong pattern. So if you see something like this holding, I mean, when you were testing this line, you would have been looking for some sort of reversal up to like the median of this area, so right around here. And again, I'm just going to keep reiterating this: mean reversion. You're always going to see some kind of reversal back up to the median of a range. So yeah, you're just looking for the most amount of information you can get from I guess whatever lines give you the most information, so that you can work off of that. So like this, extreme high, extreme low, and whatever gives you the most touch points. So yeah, GameStop, I have not looked at this one in a while. QQQ. Okay. So GameStop, I mean, this one is really difficult to do analysis on because you have to make a distinction between the indexes, commodities, and then individual stocks. So stocks only move when there's volume fueling it, whereas the indexes are always moving. So with something like this, you have to take into account other factors like um, options volume, that actually is pretty important because that can, trigger gamma squeezes where market makers are having to delta hedge, and that can squeeze these prices higher or lower. But there's a lot of external factors that matter when you're looking at stocks as opposed to the indexes. So, yeah, identifying supply and demand zones. Yeah, I'll do that. So, for GameStop, if you're looking at this volume profile, what you're going to see here is the most volume was traded at like $34. So, that's actually pretty interesting because, well, okay, I guess, well, let me see if I move this over. Because this doesn't really tell me anything about what's happening in this range, so I want to like narrow down my data. So yeah, you got a big volume shelf right here. Maybe I kind of want to cut out this high volume area. Okay, so yeah, this is a lot better. You can definitely see a concentration of the volume between 30, well, precisely 29.50 and I guess 20. So a little under 20. As long as you're in this range, you're just kind of looking for a breakout to either side. And to confirm these breakouts, you're going to want to be looking at volume. So if you look back here, I mean, you had big volume on a breakout of this range. You closed above it, and then the next day, continuation of volume, and that's when you saw that spike. So again, there's external factors that matter, like the options chain, how many options are, I guess, being held. So it's not as simple as saying, like, I think it's going to go up or down, because when you're range bound like this, external factors tend to matter a lot more. So if you break the 20s, you're going to be looking at, you could be looking at, well, there's actually some supports below it. The downside, you could be looking at 13 to the 11s. And if that doesn't hold, you're looking at under 10. But to the upside, if you can break these resistances, let me draw something. So you might have something of like a channel here. I'm going to see if I can make this parallel. Kind of. I'm not really a fan of that, but I don't know. It's pretty messy. Let me try something else. Maybe a resistance starting from up here. Kind of. I don't know. Usually you want to see what I would have wanted to see is like you come down here and then like hit this, as opposed to like coming all the way down and then hitting it once. I don't know. It's pretty hard to say with this one. Really, you're just looking for this range to get broken, and then you have to break out of this range with volume. Like I said, back here, volume spike, and then close above it, and then same thing to the downside. If you close below it, you're just looking for a close outside of this range. So yeah, I mean, there's really not too much. There's better opportunities out there, but this would be an opportunity if it breaks above 29.50, closes above it with the volume spike, and then I think you could be looking at. I don't think you're gonna break this. There's gonna be a lot of supply here, so before I draw this volume profile, I'm gonna kind of predict what it looks like. So you have a lot of volume being traded. So I think you're going to see actually, I don't know if I can predict this one, but you're just gonna see a lot of supply above is what I would think. So, um, okay, I guess I was wrong. So most of the volume is being traded down here. This is just gonna be really difficult to break out of. So what this is saying is you're not gonna have any buyers above here. Like if you break into this region, there's nothing to come back down to for support. Um, so if you go up, you're just looking at a return to 29 and then this whole range. So I don't know. There's better opportunities than GameStop, but if you can close above, I would be looking at something in here. So 43 to 34, but again, you need a lot of factors to line up for that. So I don't know. You kind of have to get lucky with that. Six billion in cash. I don't know. I don't follow it all that much, but all I would care about is this range. That's gonna tell you everything you need to know. So, QQQ. Yeah, let's take a look at this quick. Okay, so this one is an interesting one. So this is what I pointed out in the Discord last night. We hit an enormous resistance, and the issue with this is you can't run like 12% into a resistance on one of the biggest indexes that exists and then just break through it. Because the target would be it doesn't really work like that. You have to move up into it, move down, consolidate, find support, test it again, and then you break out. So yeah, I know. I've heard about GameStop, the dilution, all of that. They got a lot of cash on hand. What do they call it? War chest, right? Is that what they call it? War chest. Trust me, I'm not out of the loop on GameStop. But anyways, if you can break above this, you're very likely going to 496. And that's that target I gave when we were actually, I think I said it on the 8th. The day before this happened, I said, you're looking at 496 for this liquidity sweep. So, yeah, I really, really want to see the indexes move up and sweep this high, or at least get higher in this range. That will give us a lot to work with. Again, get about that range. I think it's the same on SPY, relatively the same. Yeah. Oh wow, you also held this support. So yeah, that was a big support. Where's that line? It might be a little off, but I don't know what I'm looking at. Yeah, so SPY, I think you want to see over 580-ish. And if that can happen, we'll have a lot more to work with, and it's going to look really good for us. Just in either direction, it'll just really give us a clearer picture. So, yeah, QQQ, if we can break above this, I'm looking for 496. If not, you got an imbalance below. So, these are your ranges to watch. Your imbalances below, I think I would be watching 429, and if that doesn't hold, 423.20. And if we can hold, actually we have quite a bit of support right around here. So if we can hold up here, I think you want to be looking for an immediate retest, and then your breakout. So we'll have to see. Today is a pretty pivotal day. I want to take a look at this quick. So that channel we have, yeah, it's looking pretty good. The bears are not in a good spot here. The bears are just not in a good spot because, again, bullish flag here. You're consolidating downwards, and it's just building up energy to make a reversal. If you were a bear, what you would have wanted to see is probably something like, let me clean this up, a drift upwards, and that gives you this kind of like tapering off selling structure where people are not accumulating, distributing on the way up. That gives you that reversal to fill this imbalance here. So I think the bulls are in favor here. That's what it looks like to me. We haven't gotten a strong sell-off. If we get a strong sell-off, it changes. But until then, bulls have the upper hand here. How to identify liquidity sweeps? Yeah, so how to identify them? I think there's two ways to word this. So how to expect a liquidity sweep? There's two things. I'm going to write these. How to, well, when, I guess, when/how to look for a liquidity sweep. How to expect. And then there's what is a liquidity sweep and what does it look like. Holy, I'm having a hard time here. Liquidity sweep. So these are the two questions you should be asking yourself. What is a liquidity sweep? So this is where you establish a high. Let me look for a good example. Actually, I know the perfect example. I think it's on, what was it on? QQQ? I think it might have been SPY. Yeah. So if you go to the weekly on SPY, what you're going to see is the three biggest liquidity sweeps of all time. 2008, COVID, and now. And this is actually why I was so bullish when we started breaking these lows. These are the greatest examples I think I can actually give you. So it's when you're testing these lows, just think to yourself, where does everyone have their stop losses, right? Their stop losses are all going to be right at these lows. So when you break these lows, think about how many people are getting stopped out. This is a major, major low. So anyone who is like long, like below this low, I guess, they're looking for the next area to put their stops, right? There's not really any area to do that except at these lows. So you're going to see a huge amount of stop losses get hit. And that creates liquidity, that frees up orders, that frees up just liquidity. And it really just kind of sets up the market dynamics. The market dynamics for one, which is like, I guess like pushing into negative gamma. It frees up liquidity, and sometimes it gives you a divergence, which I didn't even know there was a divergence here, but it gives you divergences. So liquidity sweeps, more often than not, usually result in reversals. Now, the hard part is understanding when it's a liquidity sweep or a breakout, and that's what kind of takes time and practice and just repetition and understanding the difference between a breakout and a liquidity sweep. But again, you sweep that low and you get a tweezy. Well, that's not a tweezy bottom. Is this a tweezy bottom? I think I would call this a tweezy bottom with the lows of two candles. Usually it looks something like this. And then you have like really small wicks usually. They can be pretty long too though. They can be like this. But usually the candle wicks are the same length. And this is one of the most bullish reversal candlestick patterns that I have just seen in my time of trading. So if you're looking for a reversal, look for this. And candle structures can be different at the lows, but tweezer bottoms are one of the most powerful ones that exist. So just something to have in mind. And then tweezer tops as well. Same thing goes for tweezer tops. So yeah, this is actually really consistent with tweezer tops now that I'm looking at it. Tweezer top, sort of a tweezer top. Yeah, so I guess just from this on SPY, if you're looking for major tops, look for tweezer tops. So I think that should answer what a liquidity sweep is. It's just sweeping the lows, freeing up volume, or freeing up liquidity, freeing up orders, stopping out people, pushing you into negative gamma, and that can spark those gamma squeezes. So, yeah. And then the other question was, what did I write it on? How to identify, what was it? How to expect a liquidity sweep. So this is another big thing. It kind of takes some intuition. You kind of have to think to yourself, what would do the most damage to traders? What are what are people least expecting? What would scare the most people? And that's when you kind of have to be intuitive and just think to yourself, okay, if we break this low, everybody's gonna get stopped out, right? It takes some tuition, and like you also have to look for factors of confluence. So, for example, here, I was looking for a liquidity sweep of this low. This is actually where I thought the markets would bottom. I think if you go to the daily, yeah. So, what I had here was this fair value gap, and this was lining up right for it was gonna fill a fair value gap and sweep liquidity. So I thought there was a really good chance that we could bottom here, and we didn't, which was just actually absurd because we fell like 7% the next day after already having fallen 5.5%, and then you fell like 6%, and then 7% or something like that. So this was extremely abnormal. And that just pushed us so deep into negative gamma. This is where I'm getting with the gamma squeeze and how I was expecting this. So when you push this deep into negative gamma, which is basically, I think I'm gonna explain this now. So gamma squeezes it all has to do with options and the components of options and the I guess the side effects, or I think I would say side effects. The side effects of option dynamics. So the change in an option value is represented by 5 factors. A plus B plus C plus D plus E. And so you have the Greeks, right? Theta, gamma, delta, vega, and rho. Rho doesn't really matter. It's based on interest rates, so we're just gonna pretend this doesn't exist. But theta is A, gamma is B, delta is C, and vega is D, rho is E. But that doesn't really matter. So here's where it gets really difficult for people to understand. So gamma and delta basically work together, and vega works in tandem with implied volatility. So IV, if you're looking at an options chain, you're going to see implied volatility. So the important one is delta and gamma. So what I'm going to illustrate is what the market does and how delta and gamma react to it. So let's just say this is SPY, okay? SPY chart. Stick with me here. If you can like hold through this and grasp this, your understanding of the market is just going to explode. So this is the SPY chart. Like theoretically, SPY's just going up, right? And then you have your option value option value, and then you have your gamma exposure. Stick with me here. Gamma exposure. Exposure. So let's say you have puts, okay? Before this run up happens, this is what's going to happen to the option value, right? It's just going to plummet. Whereas if you have shares, it would look like this, right? Linear. But these are not shares, they're options. So the decrease and increase is exponential. This is really important to understand. If you're holding a SPY share, or let's say you're shorting a SPY share, this is what your portfolio is going to look like. If you have one SPY share, that's what your portfolio is going to look like. Or the same as this. But if you have an option value, if you have a call option, it's going to do that. If you have a put, it's going to do this. So this is really important in understanding. The gain and the decrease and increase in your value is exponential. It's not linear. So when you have, this is where it really starts to come together. So delta is directly tied to the price of SPY, for example. So if SPY is 500, delta is $1, okay? $1. This is the delta. When SPY goes, and gamma is going to be 5 cents, okay? So gamma is 5 cents. Hang in here. So when SPY goes to 501, 501, oh my god, the delta is going to increase by 5 cents. And then the whole contract is going to go up by $1. So this gets added to it. Delta, gamma. And so, does anyone have a guess for what this is going to turn into? When the increase in $1 happens, this is going to increase by what? Any guesses? I'm just going to say it. So it's going to be 105. And that's because the gamma is getting added to the delta. So this is the really critical thing to understand. Every dollar that this goes up, the option increases by not just $1, but by $1.05. And then the next dollar, it's going to be 110. And then it's going to be 115, and then 120. So this is where the exponential factor comes into play here. Because for every dollar it goes up, you're making more than you did for the previous dollar it went up. And this is where that exponential factor comes in. And this is where the gamma squeeze comes in. So now that you understand this, you can understand why gamma squeezes happen. So this is your gamma exposure. For every dollar that this goes up, your gamma exposure. So if you're short, your gamma exposure is rising exponentially. Your losses increase exponentially. So how do market makers combat this? So if they have a lot of puts, which is what they have to do in this kind of market, they have to hedge their positions with puts, right? Once those puts start losing value, they start losing money, they have to hedge those losses on the shorts by doing this. So you can directly hedge your option losses with shares by buying shares. So they start losing a little bit of money. You know, maybe they have to buy like 10 shares, 20 shares. But as they start losing money exponentially, they have to start buying exponentially. So this is where the gamma squeeze factor comes in. And this causes more shorts to close, and then people are FOMOing in, and more people are shorting, and then they get squeezed out, and they have to hedge more. So it's just this feedback loop where everything is exacerbating each other, and it doesn't stop until every short is obliterated. And that's what happened yesterday. And the other thing is this was inevitable. When you push this deep into negative gamma, so that's basically like gamma exposure. So I think the way it's mapped out is you have gamma at 0, and then so SPY like 500 is here, 500, and then I don't know, let's just say 520, and then 480. So when you push into negative gamma, this is positive gamma, this is negative gamma. Volatility increases in negative gamma. Volatility increases and volatility decreases in positive gamma. Volatility decreases, sorry. So you have all these factors that make it really, really, really dangerous for short positions when you start pushing this low into negative gamma. Volatility increases. I mean, you have short, like you just can't go down forever. That's just not how it works, because you have so many people shorting, and that just charges up this negative, like gamma exposure. And the second someone starts losing a lot of money, they have to hedge, and then everyone starts losing money on their options or their puts, and they have to hedge. And this is mainly for market makers, commodity trade advisors, and hedge funds who they have like systematic risk management. So algorithms that are automatically doing this hedging and the hedging. So systematic hedging. This is why it happens, and that's what happened yesterday. So how many of you were able to like how much sense did that make to you guys? Oh yeah, that's right. I want to point this out too. So Fibonacci ratios. Someone in the Discord pointed this out. Wow. Yeah, we were like right there. We were off by just a couple cents. Yeah, again, mean reversion. Mean reversion is everything. So now we're looking at the mean reversion of this drop here. So, yikes, that's actually a little scary. We actually went up as much as we needed to. So, I don't know. It could get ugly again. But it's not what I'm leaning to. You still have this not very bearish structure if this holds. So, if this doesn't hold, it's a different story, and you're probably looking at 17,500, which on the Qs is going to be 422. But again, you have to touch this region first. So there's a lot of stuff in between. But yeah, today I think the market just needs to take a breather, because we just ran more than we ever have in history in one day. So yeah, a breath is pretty normal at this rate. So yeah, so going back to Paula's question, this is how a gamma squeeze works, and how to identify one. So that's where you kind of have to go and look at I can actually show you guys. So there's a platform called Zero Hedge, and they provide really useful metrics. Give me a second, I'm pulling it up, so just give me a second here. So what these people do is they like provide a lot of this short positioning data, and let me see if I can find a good chart. So yeah, here's an awesome chart actually. So wow. Okay, let me save this and then move it over. Where'd it go? Give me a second. Okay, so what open? Yeah, okay. So you get data like this where this is just telling you like you have all these kind of different data metrics, and it shows you. So this isn't the best one to represent short interest data, but when you're looking at this and correlating it to past points in history, it can really give you a good idea of the extension that the market is making into like negative gamma, positive gamma, or just in any direction. And when you fall this much, mean reversion has to happen. So the more you fall, the higher you're gonna go and the harder you're gonna go. So I would really recommend looking at Zero Hedge, and they just show you incredible data. And another point is that you can look at is the PCC. So if you're on TradingView, click this plus button and go to PCC, click new price scale. And this is going to show you, where'd it go? It's loading. This is going to show you the ratio of puts to calls in the market. So let me do it on this one. New price scale. So these always correlate with the lows here. Just look for yourself. Like the absolute lows pretty much. I mean, this one was off by a few days. This was pretty much the bottom. That was the bottom. This is, I don't know what this is. Ignore that. But when you get these spikes, they more often than not correlate with the lows. And this was actually a little higher yesterday. But I mean, if you just take a glance at it, the PCC normally doesn't get up here. It only happens a few times a year, and when it does, you usually see it was much higher than this, like a few days ago. Maybe if we zoom in more, it'll look a little better. There's better ways to display this data, but this is just one of them, and this was showing you that a lot of people are short right now. And more often than not, that correlates with the lows because it triggers those gamma squeezes. So, yeah, there's just a lot of different metrics you have to look at, and you kind of have to tie it with other factors. So, other factors being like, I guess, technical factors is one of them. What is that blue indicator? The one I just had. This is the PCC. So put to call ratio, you click this plus button, and then you click new price scale, and this just overlays it, and you can see the put to call ratio lining up in like, I guess, the time dimension with the stock price, and you can see how it correlates with the movement in price. So more often than not, it correlates with the lows. So I'm not sure why this isn't higher, because I saw some data that said they were like the most shorts ever in history, but I don't know, maybe this is just displaying it differently, but a lot of people were short, so this move was inevitable. And another thing that I actually saw an hour before we started squeezing yesterday was the 50-day moving average. Let me just go to the time frame. So on the hourly, if you were looking at the 50 MA, I think on extended hours, yeah, the moving average was curling up before this had even happened. So it was like on this specific candle, I think. It's not, this isn't how it looked when I saw it. I think I can just move this up. So yeah, I have the screenshot right here. So the moving average was starting to curl up before the price had even started skyrocketing, which usually it's the other way around. Price has to start running up before the moving average starts to curl. And I was just like, wow, I don't think I've actually ever, I don't know if I've ever seen that before, but I don't think that happens very often because you usually have to break through. So this is the moving average. Price has to move above it while it starts curling, and then you come back and test it, hold it, and then the moving average starts coming up. But this time, this is the moving average and this was the price. So that was really interesting. And yeah, I mean, I saw it coming. I literally said it's going to explode. And then we went on a historical run. So there were a couple things that were telling me the market is about to just go berserk, and yeah, that was one of them. So I think what you would have needed to do is just also being through the time of 2022 helped a lot. Yeah, so this is kind of, so if you were to overlay this kind of squeeze or this price action to here, it looks really similar to this region. You pushed really deep and then you started squeezing up. So this is what I'm kind of looking for. We're also right under this last like resistance zone. So that would be this range right here. I thought we had already tested it. Oh yeah, okay. Oh, this is SPY, that's why. But anyways, yeah, it feels very similar to this area. So that's why I'm also kind of looking for this to push above for that liquidity sweep. And if that happens, we can really start forecasting some bigger paths. So if we get up to here, like holding this region, you could see a move to all-time highs. But it could also just be a liquidity sweep, and then you start moving down to a new low. So that's what happened in 2022. Liquidity sweep, tested the bottom, bounced, moved under, moved back up, and then you just died. So it's a really pivotal region. This area is enormous. And that's what everyone needs to be watching. We rejected once. Let's see how the channel's doing. Oh, whoops. NQ. Nothing's gonna happen until we break out of this channel. So until then, I mean, it's kind of a sit and watch. But if you start breaking this, and you can break through this small fair value gap, it's gonna start looking really, really bullish again. And I would be looking for 21,500. Wait, why is it different? 21,500. Have I been missaying this? 20,500, I guess. Have I been missaying that the whole time? I guess 20,500 is what I meant. Really? Okay, yeah, 20,500 is the area I'm looking for. And if you can do that, we can start forecasting some bigger paths based on what it does above there. So yeah, we got a little bit of time left, 20 minutes. So if you got more stocks, make sure to drop them in the chat so I can take a look at them. Meanwhile, I'm gonna show you guys in video. Yeah, so before this run happened, we were down here and I said, I think we're gonna see a pretty decent move up. And I've been looking for 128 for a while, but there is a lot of confluence for 128. You have this upper trend line, you have this Fibonacci ratio, the golden pocket. And then if this is a 5-wave development, you're going to be looking at, again, 128. So, yeah, a lot of things are lining up for 128, and that's where I plan to sell most of my shares. Most. I think if we can get up to here and it's looking decent, because again, this is a bull flag, which is crazy to think about. But what would happen? You consolidate downwards and then you break out. So you could see all-time highs. It's possible. And I think I'd be looking at this. Yeah, this for sure. So wow. I mean, it's too early to say. But you're looking at 160 to 170 on NVIDIA as a possibility. So keep that in mind. 160 to 170 is very, very possible. Yeah, that's really interesting. So I think this is not the market that I want to be bearish in just yet, considering how many people are saying recession, how many people are shorting, and just all the data I've looked at. It is just, I just do not want to short this right now. I really would be comfortable holding shorts if I was in like above 20,500. And I think that just goes without saying. Like, I mean, it's so deep in profits, but another reason for that is because of this Judas swing, which maybe I'll talk about in a future video. But you have this basically schematic, a topping profile schematic, where the structure is developing in a topping profile. So you have a liquidity sweep, you gapped up, you create an imbalance, and then you break a major low. Major low gets broken, liquidity sweep, you return back up, and you fill the fair value gap with the imbalance, and then you distribute. And the last time this happened was years ago. So I just gave up on looking for them on the higher time frames, and then it actually happened, which was really disappointing. But I think the last time it happened was like 2022 or something. So let me see if I can find it. Yeah, 2021. You broke the major low, created an imbalance, you filled it, and then you distributed. So this is such a similar area to this right here. Let's just overlay it real quick. Let's see what it looks like. Yeah, I mean, it's pretty similar. It's definitely not the same, but I don't know. Actually, this is pretty similar. I'm not gonna lie. I mean, what do you guys think? That looks pretty similar, right? You have this downward structure in 3 waves. You didn't break the high. You have an imbalance. You had trouble getting into that imbalance completely. It's pretty similar. You even have this like small like descension, and then even a spike at the end. Spike, imbalance starting right. This is really similar. And this might be a fractal actually. I wouldn't leave it out of the picture, so that's pretty interesting. Wow. Well, I guess we can dive a little deeper into this, and let's see. So what happened after that? So what was this? 2%. This was not that. What was this? 5%. That was a pretty big day though. I remember that day pretty clearly. But it's nothing like the day we had yesterday. 10% is unbelievable. So Okay, we're now just starting to test this trend line, so we're getting close. Yeah, the rest of the day is going to be interesting. I think it's going to be relatively slow. We just have to test this. And then what happens there, either we break it, which I would rather not see, or we're going to hold it and break out. So today, tomorrow is going to be a pretty pivotal day. For, I would say, the macro, actually. I mean, you still have to break this, and then these lows. I don't know. Bulls have the upper hand too. That's all I have to say. But that fractal I just put down is eerily similar. Like, eerily similar. So, if this fractal continues playing out, well, we already made this high, so we would want to be breaking that high. I don't know. I guess there's some differences, but I don't know. I guess take that with a grain of salt. But I would really like to see this high get broken at some point. We've touched this range, which at the minimum is all we needed. But yeah, there's a lot of things to consider here. So yeah, if we take a look at some of the ones that haven't fallen yet, Apple and Microsoft. These are ones that I've been watching. Is this the one that I charted on? No. Okay, Apple did finally fall. Wow. Okay then. Well, that is, wow, that's interesting. It doesn't look great. Apple doesn't really look like it could be finished falling. No divergences. But what I was trying to get at is, I was going to say these haven't fallen yet, and these actually have fallen. So, I don't know, that's kind of a dead end for what I was going to say, but yeah, this was my target region, and we've now hit that. So, everything has hit the targets that I wanted to see. I mean, Microsoft could see 320, and it probably will in the future, but I'm not sure if it's just ready just yet. So, yeah, everything seems to be hitting these, like, however long this trend line is, 6 years, everything is kind of hitting those trend lines right now. I mean, it's off by a little bit. Actually, no, it's not. Everything is hitting these really, really, really big trend lines, except Microsoft. So, Microsoft seems to be lagging on the drop a little bit. I mean, we hit that previous top, but I don't know. I think Microsoft has more downside to go. There's something missing here. I think I need to test this. The S&P 500 tested it. So, what was I looking at? Oh yeah, the trend line. Yeah, I remember it being looking a lot better than this, but I guess not. Let me redraw it on here. Say take a low. I guess if you're lining it up with this one too. Let's see how the candle looks. If we move it up just a little bit. I think this is the best. Yeah, wow. Okay, put this trend line on your chart, because this is the one to be following. Yeah, this is definitely the trend line. 100%. Yeah, we clearly bounced off of this. So, I think one of these days this trend line is gonna break, because you can't do this forever. Yikes. if you're looking at a mean reversion, you're looking at probably like under 400. Yeah, somewhere around here. So, very interesting. And just for fun, I'm going to show you guys this macro count that's possible. So if you're familiar with Elliott wave theory, after 5 waves, you get a corrective wave of 3 waves down. So it should be wave 1, 2, 3, 4, 5. And then you return to your mean reversion of that entire range. And that puts you at 340 to 260. So let's see what the volume profile. Let's see if there's any confluence. I'm looking for congestion around here, I think. Come on. Okay, not as much as I thought there would be. I mean, if I move it forward, I think you'd see congestion here, but still. So basically this is saying, wasn't this COVID? Interesting. This is actually kind of surprising. I would have expected a lot more volume to be traded here, so what this is saying is we don't really have any demand until 200, like 210, 200. I don't know about this one. That would be a painful bear market. Stagflation, recession, depression, whatever you want to call it. You're looking at from the highs 77%. And I mean that has happened. If you look at the NASDAQ, going back to the tech bubble, 5 waves down. This is like 83%. So that was the tech bubble. I mean, we're definitely in a crazy bubble right now, and we've seen a lot of devaluations. But this is an interesting one. So I don't know. It seems like this crash is not completely over. In the long term. In the short term, I think it's very plausible to see some more upside. You even have a monthly fair value gap, which these don't happen very often. You have a monthly fair value gap all the way down here, so we likely see 440 at some point. What else do we have? We have one at 295. I mean, you can have these all the way back here, so this would just be, I don't think this is happening. SPY to $45, but I don't think that will happen. But you definitely want to pay attention to these ones that are like 1, massive, and 2, relatively new buys. So I wouldn't leave that out of the picture. 5 minutes left. If you have any questions, make sure to leave them. But otherwise, yeah, I think to sum everything up, short term, we need to look for this. Okay, we just hit it. So this is where it gets pivotal. This is where it gets really pivotal. We should definitely get some sort of reaction off of here. And short term, I'm gonna look for these imbalances. This will probably happen in the next, I would say, 15 minutes, 20 minutes. I would be looking for this one. So yeah, we might get to see that before this live stream's over, but If not, the rest of the day is going to be pretty pivotal. And if it can hold, again, you're looking at 20,500 into the downside, 17,600. So this is a massive. Okay, here's the way you can play this. Well, implied volatility is going to be an issue, but when you have something where you're looking at like a 4% move in either direction, what is it to the downside? 5%. This is where you can do a straddle. And this is probably one of the better scenarios for this. Because basically you're just betting that it has to move outside of this range. And if it doesn't move outside of this range, you lose money. But this is one of those patterns where a breakout has to happen. So if you get an expiration 2 weeks out, the odds of making money are extraordinarily high. The only issue would be IV crush. I'm not sure if they show the Greeks on here. Let's just take a quick look. Options. I don't use the options platform here very much, so let's see, volatility. Okay, so here are the Greeks. If we look at, where's the IV? Okay, May. Today is April 10th, so 2 weeks out, 14 days, the 24th. The IV is 63. That does not sound right. I don't know. This doesn't seem right, but I don't think this is right. That can't be right. It should be over 100. I'm just gonna look on my phone quick. SPY IV. I guess maybe the IV crush already happened, but normally this IV is higher, so I'm not sure what to think of that. IV. Let's see. Can we look at the IV crush? Yeah, we can. So, yeah. This is much lower than I thought it'd be. So I guess maybe the IV crush actually isn't as much of a danger as I thought it would be. So back to what I was saying. I think this is just my opinion, but a straddle is not a bad decision here. If you move outside of this range, the odds of making money are very, very, very high. So that's where I'm gonna end this live stream. I really appreciate you all coming out, giving me the time, interacting, asking questions, and yeah, I'm looking forward to when we're doing the next one. So, peace out, guys.